Welcome back to the channel, and as always, if you're copy trading, you're an absolute moron and you deserve to lose all your money. And with that out of the way, we're going to discuss today's stock, which is Lululemon Athletica, ticker LULU. This is a stock that has reported earnings in February, I think it was, and even though they were good, the company, the stock went down quite a bit. Uh, Here, yeah, uh, late March actually, they reported, and the stock dropped significantly because even though the earnings was beat, the guidance for the year was revised down. So the outlook fell a bit short of expectations within the analyst community, and so you can see that the the price went straight from the top of the SMAs to cross them and now is sitting well below them. So a few things that could happen uh, down the line. First of all, we have this 50-day SMA about to cross the 150. In my opinion, that sometimes can be a bit of a pullback in the short term. But also, I think we could have a retracement, a bounce back in the price of the stock for various reasons back to the levels here that we see in the 250-day moving average. So this is a stock that I want to buy. I've put an order to buy it at just under 350. So we're not far. But here's a few reasons why I want to do it. So first of all, this is a stock that I started looking at the beginning of the year. I felt good about it. I had it as a long, but with the earnings coming, and I thought that the price was pretty much priced in. I didn't action upon that, so I kept it on the watch list. I'm glad I did because obviously we had this episode here. Having said that, if we look at the long-term trajectory of the stock, you can see that we have crossed a major support level, and we're sitting down at a multi-year resistance level too, right? Around 350. So I do think that there's room for a pullback for the stock to go from here to say 400, right? So in terms of how I think about that, look at the valuation and where we are. So we got a valuation here that goes to the pandemic to an even below levels to where we are now. So from a valuation perspective, we're sitting down just as if this was March 2020 and the world's coming to an end. That's the valuation that the stock is sitting at the moment. On a similar line, what we also have is an RSI that is incredibly oversold. So currently sitting at 23, but the minimum that it reached was around 90 ever in that same episode. And then in a similar kind of episode that we had back in 2023, we are past that level on the RSI. So from a valuation perspective, the stock has not been this good in years. Like the the only time where you could find a valuation worse than this was back in 2017, 2015, 2014. So obviously, when the stock was a hell of a lot younger than it is now. Of course, the 2008 was also a factor, but the stock was pretty much brand new, and it was in the middle of the financial crisis. So obviously, this company is in a much different spot at the moment. So same thing if we look at the technicals, MACD definitely signaling a very good entry point. And at the same time, uh, if you look at recent short interest, right, there was, and this is, I think, one of the reasons why I didn't enter back then. The market was feeling at slightly negative about the stock, even though they were achieving great things. So the short interest was just below 4, and then it's dropped significantly after a few weeks. Then rose up slightly after the earnings, but not to significant levels by any means. So with that change, I think we could see a stock here that could recover, could touch again those 400, and in the long run for sure, hell of a lot, go to a hell of a lot higher levels. Now, even though the earnings growth for this company is not the highest in the sector, it's worth mentioning that the nominal EPS of Lululemon is one of the highest. And there's no competitors aside from Deckers that have such high EPS nominal figures achieving this kind of earnings growth in terms of percentage, right? So you look at, for example, Nike, you look at other competitors, which I have here. Mm, okay, so I thought I had this slide. I'll pull it up very quickly. So look at competitors like we got Capri, we got Deckers, uh, Nike, Canada Goose, and then we have as well Steve Madden, Levi Strauss, we got Zegna, and one that is causing quite a bit of interest in the market as well on. So look at where Lulu has been sitting all this time. So quite a stable valuation here. Typically leader of the pack. And then it goes below Deckers, which is trading at $800, and it's still way below on in terms of evaluation. So at the moment, it's trading just at a similar valuation than Nike, but the growth that we see with Lululemon is much better than Nike. So, for example, uh, looking at the figures here, so Lululemon is going to grow just about the same in terms of earnings growth this year, but the EPS is like 4 times. So even though from a relative standpoint, that earnings growth is similar, it is a lot harder to grow a company that has that level of EPS, right, per share. And then, yes, it's true that Lululemon is not as big as Nike, but we have to bear in mind how that reflects into the price of the stock. Now, for year two, that performance is surpassing Nike, and it's also surpassing in year three. As for the revenue growth, the revenue growth is actually a lot better. So the revenue growth and the earnings growth are pretty much mirroring each other with Lululemon, which is not really the case for Nike. So Nike has pretty much flat sales growth, and that's for the next couple of years. Year three goes up a little bit, but I struggle to see how you can. It's always a bit of a concern to me how a company is going to grow earnings 10% as Nike says it is without significantly increasing sales growth. And so that to me justifies this premium that we're paying for Lululemon here. As well, the PEG reflects strength in the market. It's trading at a premium compared to other competitors from that perspective as well. Now, the company has been doing a lot of things. They have put in place a strategy, the power of 3 x2. You can read about that on Seeking Alpha if you wish to do that. But to me, I've seen this stock that is trading at a very attractive price for me to enter at the moment. It still has decent brand awareness. It has positive growth and has fallen a little bit out of favor due to a number of macroeconomic factors. So the consumer being a little bit strained, um, the slowing in the last few weeks of the economy. But what if we change that perspective, that macro landscape over the next 6 months or so, right? So put yourself in a situation where the Fed comes in and they cut rates, then the consumer starts getting more traction, which it has. So if we look at the University of Michigan Consumer Sentiment Report, it's troughed already, and it continues to get better. So what if that trajectory continues? I think it's possible. And then we have to bear in mind that um, the company has actually been doing quite well in China. So there was an earnings report that I opened earlier. And essentially, what it explained is that the company has been growing quite well in China over the last few months. So in the last quarter, the the revenues in China were just above $290 million. That's around 90% of the company total revenue. However, that increased 60% on a constant dollar basis, which is great. And at the moment, my portfolio is geared towards a bearish China weighting. So for me, this is a great way to, one, stay long. I'm kind of betting on a strengthening of the US consumer, which has been a bit of a challenge for the company lately, but I think that is going to turn around. Second is going to hedge my risk of the Chinese consumer, which I'm currently bearish on. These guys are actually doing well, and there's not many companies out there that you can find doing that. So I think that's what I'm going to enter. Stock is getting close to my buy order. Hope you enjoyed the video and see you soon.